Good day, YouTube. This is Jay Money with Falling Forward Financial. Just two stocks here to buy before they take off. And as you can see, this is just dated on the 12th, so yesterday. But of these two, well, actually both of them, I haven't talked much about either one, so I thought the article was kind of interesting. But these stocks could soar into the next bull market. And we'll kind of go over and break them down a little bit. But even after the rally, there are great deals available. Wayfair stock has rebounded sharply off of its 52-week low, but it still trades at a discount to peers in the retail industry. Meanwhile, Domino's, or DPZ, continues to invest in improving the customer experience, which could lead to more growth for investors. So here's a look at Wayfair. Kind of what they've been doing here lately. So if you've ordered anything off of their website, that would be interesting to know as well. But you can kind of see they were on the decline here, and then they just took off. So this was probably, I'm guessing, about pandemic time. So it's currently at a $7 billion market cap, days range of 62.82 to 68.78, and the 52-week range of 43.31 to 317.45. That's just crazy. We'll kind of break it down a little bit more here on Robinhood. You can see over the past year how they're down over 78%. They were in the $200-$300 range, and it's just been going down ever since then. In the past 3 months, they're up actually almost 19%. Here in the past week, up over 37%, and the last week, 6.42%. And here in the on Friday, so they were up as well. So looks like it's finally starting to take off. So founded in 2002. If you don't know much about them, they're an online home furnishing store, operates through the U.S. and international segments. $7.2 billion market cap, high of 68.78, low of 62.85. So if you wanted to trade this one, you could get a little bit of a play in there. And the 52-week high of 317.45 to the low of 43.31. Average volume of 4.43, and volume on Friday at 2.79. Their stock performance lately might lead investors to believe there's a struggling business not worth buying, but those investors would be missing out on potentially a wealth-building investment with more than 23,000 suppliers, 18,000 employees, 3,000 engineers, and 24 million active customers. So a significant share of the $800 billion home goods market. The company was growing revenue around 40% a year before the pandemic. A rush to the shop online in 2020 sent revenue up 55%, but Wayfair has had its share of struggles ever since. The company has been hit with a growth hangover as consumers are returned to brick-and-mortar shopping, and also facing inflation challenges and supply chain constraints. So I don't know what it's going to take to get over the supply chain constraints. And the last I heard, it was baby food. It's just one thing after another. So when that's going to end, it's hard to say. So, however, the stock has already started to rebound off of its recent lows, up 30% in the past month. So might be a time to definitely watch this one. Not that I give tax, legal, or trading advice, just state my opinion. But here you can kind of see Wayfair in the purple, the PS ratio, Walmart here in the orange, so it's just kind of flat. And here is Amazon, kind of up and down, up above in the blue. So Wayfair, will likely return to growth. It has a strong brand. The consumers will continue to shift more home goods spending online, as they have with just about everything else. Wayfair is creating one of the strongest brands in e-commerce, and now is the time to build a position before better news sends the shares higher. So, if you could get in the level now and get back up to the get it back to the $200-300 range, you'd have a pretty good investment. So, next is Domino's, or DPZ, currently at $412.24, a $15 billion market cap. Days range of 406.09 to 415, so about a $6 range in there if you wanted to trade it. 52-week range of 321.15 to 567.57, and not a whole lot of volume on this one, probably because of the price. But Domino's Pizza shareholders have more than doubled their money in Domino's over the past 5 years, and investors could be in for another great return when the stock is trading at 31% off of its highs. So Domino's is already everywhere with 19,200 stores open globally. It may not seem like it has more room to expand, but the company creates value for shareholders by growing same-store sales and using share repurchases and cost discipline to boost earnings per share. Here you can kind of see in the purple the earnings per share diluted, and in the orange the revenue per share. It looks like it's from 2014, just been taken off through 2022. Nearly all of Domino stores, 98% to be exact, are franchised and or non-company operated. This frees up capital for management to deploy to new stores and invest in new technologies and enhance the customer experience. Innovation is something Domino's is known for investors. It has partnered with large tech and social media companies to spread the brand and give customers convenient ways to order using, for example, Meta platforms, Facebook Messenger, or Amazon's Echo devices. One of the more interesting innovations was the recent launch of the Mind Ordering app that Domino's released in partnership with Netflix ahead of the season 4 premiere of Stranger Things. That's kind of interesting. But that is those two stocks. So we have Domino's and Wayfair. If you have either one of those, you can list that in the comments and what your thoughts are on each one of those. And if there's any other stocks out there you'd like to see a video done, I'd be happy to do that as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.